Yo, what up, everyone? Good evening, right? And we're gonna actually be locked in here this time. I'm not doing this in bed. I'm doing this just hanging out with you guys at my computer. I'm gonna be reviewing price action today. Today was October 13th, 2025. It was Monday. It was bank holiday, and the people they're throughout the day today. People were like, "Dude, why'd you share a bank holiday?" The issue wasn't the bank holiday. The price action was fine. It was that I should not have taken a trade that was expecting expansion. I should have taken a lower time frame entry on a lower time frame AMD. And if you don't believe me that was a real thing, that there was opportunity there, I'm going to show you exactly how there was. And actually, Kurt, I can't tell if you're trolling me, bro. Stop, dude. One model, AMD. Why would you? Okay, let me give you an analogy. It's okay. We got to give you an analogy because this needs to be cleared up, okay? It's like in basketball, right? Let's say. Wait, hang on. Let me think. Let me think of an analogy, bro. I'm gonna think of one. Okay, in basketball, right? Kirk, what the heck, bro? Okay, in basketball, different types of shots are useful for different things. At the end of the day, the goal and the way the game is played is the same. It's all to get the ball in the hoop. And past that, there's different ways to get that ball in the hoop, right? You could shoot a three-point shot. You can do a layup. You can juke someone out, step back, and then shoot a further out two-pointer. You could pass it to the guy on the end of the rim. He shoots a three-pointer. All different ways to get to the same goal, which is get that ball in the hoop. The same is true with trading. Trading, it's all one thing. It's generating stop losses, manipulation of those stop losses, and then expansion. And it's not always going to be that straightforward line, but it's going to move in this way. So the key is identify the manipulation after consolidation and then get on side with that, right? I want to be able to not... If I'm a basketball player, why would I say, okay, I'm only allowed to shoot layups, or I'm only allowed to shoot three-pointers, and I'm not even going to allow myself to shoot a two-pointer? Like, for instance, that's like me going into the market and saying, I'm only going to do Phoenix model but what if there's a great inversion for value gap that's really, really obvious, and that was the obvious trade of the day? It just doesn't make sense, dude. It's AMD. These markets move to generate stop losses, manipulate stop losses, and then expand. Why would you hold yourself back? It's not any more complicated than that. It's not one model. This is the only... It's like, okay, it bothers me so much because like everyone's like, I just trust my strategy and I trust my edge. Dude, the market is here to manipulate and expand. It doesn't care about your freaking strategy. It's not here to follow your strategy. It's going to manipulate and expand in any way that it can. All we're doing is getting on side. I mean, I can't understand these people that are just like so tunnel visioned on, we have to trade one strategy, this is the only way to trade at all, and any other deviating at all. It's like the best artists in the world actually give themselves freedom to explore within the rules of the game. The best people in the world at what they do think outside the box within the box, right? It doesn't make sense, but it does, okay? The best people in the world, what they try and do, if they're trying to do something that's... If you want to be the best at something, you got to be able to think outside the box while still playing within the rules of the game, which are AMD. So, that's my rant. Enough with these one model stuff. Like, It's literally just AMD. You could take a change in state, inversion for value gap, 2022 gap. And guys, I just guys, that is how these markets move. If you don't believe me, you gotta backtest, because that is how these markets move. I'm just saying. So yeah, sorry I get a little amped up by it, but it's like, it is so obvious that that's the case. So let's actually first start out by talking about this. So this is the trade I took. It was late. Shaquille O'Neal, great player, could not. How does this relate, bro? Okay. It was not his model. Bro, Kirk, I'm going to strangle you. I'm gonna send the flies after you, bro. Those flies, they're coming after you. I'm a personally order a whole battalion of flies to come swarm your house, bro. Okay. That trade was, in hindsight, not that good. In hindsight, I know that in the moment, like, we saw, okay, we had time-based SMT, but here's the main reason that failed. The main reason is it was a bank holiday known as Monday. We were not expecting expansion. I literally said this right at the start of the stream. I was like, guys, we shouldn't expect expansion today. With that in mind, this was more of a seek and destroy conditions type of day. We should have been more. I should have been more aware of the conditions, and because of that, why am I taking a 5-minute entry within premium of the range? It's just so stupid. And so obviously, it's a lesson. We're gonna move on. But once again, the way I would take this is the trade I would wanted to have taken was, we have 7:30, we have midnight, and you can actually see in the live stream, I almost take it. I hesitate. And I actually kind of want to pull that up, actually. Oh, man, I should probably do let's look at the market. Let's look at the live stream. Let's look at the live stream, and then let's kind of see, like, why did I hesitate? What was my reasoning for why I hesitated? And then how can we prevent that in the future? Because in hindsight, this was very obvious, right? We obviously had a liquidity sweep. We had an accumulation range. We had not just any SMT, a time-based SMT. We broke this high. We come back to equilibrium. Why did I hesitate, guys? Why did I hesitate? This is the most obvious 2022 model. And yet I hesitated. And so I'm going to go on the stream and, like, actually look at it, because I think the main reason was we were thinking, oh, we want to make sure that we're on side. And it's like, no, sometimes you just have to execute. I mean, this trade would have probably been 3R if I had just clicked the button. So let's actually look at it. What's 2022 for value? But do you guys see the trade here, right? We have actually, I'd mark it out like this. We have a liquidity sweep. What's the liquidity sweep? Sweep of these lows over here. It's actually 90-minute lows. Why is it 90-minute lows? Because it's lows from before 7:30. Anything before 7:30, well, it's the low it's the low between 6 and 7:30, making it the low of the previous 90-minute session. So when we get a low here that forms, oh wait, no, I meant this, not that low. Whoops, I meant this low. I messed this up. So this right here, this is the low. See how this is at 7:31? So this low right here at 7:31 was the low between 7:31 and 9, and then this low here was the low between 9 and 10:30. So time-based SMT, we're below both of our true open, or we manipulated both the true opens. We break structure. You might say, oh, what are you talking about? That's not break structure. It's displacement. Once again, the market, it's break of structure equals displacement equals break of structure. They're not going to necessarily be, like, exact. You get what I'm saying? But if it has obvious displacement, that's brake structure. Even if it's not like an actual swing high. Because what's happening, why do I say that? Because on the 32nd you can see it is a breaker structure, right? On the 32nd it's very obviously a breaker structure. So anytime it's displacement, it's actually a breaker structure. And then what happens next, guys? Next, picture mark the size of 32nd per value gap. When we break structure, we come back to equilibrium. And this was just the most obvious trade in the world, and I messed it up, dude. Let's figure out why I messed it up. Let's go through watching. Yeah, let's figure out what happened here. So,
I'm just gonna
why did I hesitate? Let's figure it out. Why did I hesitate? You can see we even had the whole entire SMT marked out and everything. We had everything marked out. We had a time-based SMT and we had a regular SMT. We know this is the magneto effect, where if we have a time-based SMT, we're going to draw back up to the one that's not time-based.
Gotta turn off low.
And yet I hesitated.
And
I think maybe why I hesitate is because there's not a breaker structure. But you can see how close I am to entering here.
But I'm nice. Plus 780.
Okay, so this signature right here, guys, when we see this displacement, we have to get in at equilibrium. This is basically us sliding in our order at equilibrium to continue price up. We have to get in when we see that sweep and displacement. We got to get in.
On fun, we got that rejection block long. Okay. Here.
Why did I not enter? I was looking at the 2-minute. Yeah, I was looking at the wrong time frame. It's so important not to make sure that you're wanting, when you look at when you're ready to take your trade, think, okay, could this be a lower time frame entry? Here I was looking at the 2-minute. I didn't see the entry.
This looks like a 1 minute for value gap.
I almost took it. My brain is loading right now. I was so close to taking it.
So maybe we take this on a 2022 model.
Right as I said those words, I had to enter, dude. And it's hard because you obviously don't want to mess up.
Okay,
I had to enter right there.
Where's equilibrium? I'm gonna take this 2022 model.
I literally said I was gonna take it too.
Well, let me actually be thoughtful about this.
No. I had to execute that. Whatever. We get the idea. I hesitated too much. We get the idea. What do you guys think about that? What do you think I can do to have more conviction in myself? And I think the main thing was I felt like I didn't have the risk calculated and I didn't have everything set up yet. I think that was why. So I have to make sure I get better at calculating the risk. Let's say we calculate the risk here. Okay. So that's one contract on personal. So I gotta rememorize all the conversions. So I actually probably wouldn't have it like that. I'd probably go like this, which means it would really be like, okay, so I couldn't do a contract on personal, so it would be 12 on top step. Okay, I gotta remember this. I gotta memorize this stuff. Anyway, guys, you can clearly see how nice of a 2022 model this was. in my market recap today, I'm going to be talking about the Magneto effect because this was probably the best example of the Magneto effect that I've seen in the market. And it really goes to show like these concepts are playing out that we understand and we know, right? These concepts like time-based SMT targeting a regular SMT as a liquidity pool. That happened today. So there we go. Sweep here. Break of structure for value gap. So what's this? Accumulation, manipulation, entry at equilibrium to get onside with distribution. Clean as heck. Not to mention we were also below 922, which was the 90-minute true open. There was everything to love about this, and I hesitated. I gotta be able to execute, because a lot of time the good trade. Here's what's gonna happen. Actually, a lot of the time, the good trade is gonna occur on the low time frame, and the fact that it's occurring on the low time frame is leading me to hesitate. And then by the time we get the one on the higher time frame, I execute the higher time frame one, and it fails because it was. I'm entering late. The idea of the trade was already happening. I entered it late. I waited too long. You know what I'm saying? Not to mention, it was also like going into the macro-ish. So yeah, I would consider this going into the macro. We go. See, my definition of macro is, going into the macro from the entry to the draw on liquidity. That's my definition of macro. So according to my definition of macro, this is perfectly in the macro. So from entry to draw on liquidity. And then you can see we hit equilibrium perfectly. Yeah, I should have executed this. Dang it. And then, yeah, we had a really obvious high here. And, yeah. And then you could have even targeted these low resistance highs, but whatever. That's fine. Honestly, you could maybe just target that. Anyway, let's just show if we targeted this high. That's 3.29 to 1 if you took this as a 2022 model on the 30-second. Sorry about you. I felt like I was yelling earlier. Sorry about yelling, guys, but like I get fired up. What is that? Okay, we don't need that. So once again, this was the trade that I hesitated on, that I didn't take, that I wish I took. Whew. Whatever. You took this one? It's impressive, man. Good job. Yeah, so yeah, just very, very clean. I hesitated, dude. I shouldn't have hesitated. Whatever. Now we know we have to trust these low time frame trades sometimes, because the issue is when you see these low time frame trades, you're going to hesitate, and you don't have that much time to really hesitate. You really got to be able to have conviction right at that moment and just say, I'm going to take this whatever happens. And the issue is, like, the reason I like low time frames is because on a day like today, higher time frame is not going to expand. Higher time frame is not going to be expanding. So why would I be trading the higher time frame? If I know it's lower time from AMD, I gotta trade lower time from AMD. Alright, so nice 30-second 2022 model. You can consider this a 1 minute 2022 model too. Either way, we're below every single true open. 9:45 22 model, 30-second. You could consider a 1 minute one. Call me Mini Jake. Kirk, you are just Kirk. You'll always be Kirk. And then if you took it like this, I think you need to have set risks in place to avoid wasting time. Wait, what do you mean wasting time? Like, you mean like at the beginning of the stream? Like how I was just getting distracted? I don't understand what you mean. Set risks in place. I think what you're saying is I hesitated here. Oh, I see what you're saying. Oh, because I was worried about calculating the risk. Yeah. That's the main reason I end up hesitating is because of the risk calculation. That's usually the main reason I end up hesitating. And I'm gonna probably just work on rememorizing it, because the issue is when I decided that I was going to switch the risk on personal from 20 to 40, that messed up all the calculations, so I have to relearn it. So that's kind of why. But the reason I did that is because the stop losses were too tiny, way too tiny. But I don't know. Okay, so yeah, bang, right up to that high. Pretty clean. So this is the other way you could take this. The reason I have it like this is because, well, it's pretty clear that we're retesting equilibrium. So if we really truly are going to hold this, equilibrium should hold. This is just kind of like a screen time thing. Not even a screen time thing, just something that you should know about the 2022 model is if the 22 model is really going to hold, and it's going to hold the most accurately, it's going to hold right at this equilibrium snipe. And so that's just something that that's why you could theoretically have a stop loss that looks like this, is because if you take it knowing, hey, equilibrium should hold, then you get something like this. But yeah, I'm gonna probably just try and re-memorize the risk calculations. Yeah, I'm gonna do that maybe while I'm at work tomorrow or something. Alright. So this is the second way you could have taken it. Same exact trade, but with a tighter stop. Number 2. So I'm not going to make, because I originally called this a separate thing on my Reflect IQ. I'm actually going to go ahead and delete that, actually. I was originally calling this as a... made this trade type specifically I called it 2022 EQ snipe. I'm actually gonna delete that because I'm not gonna have a separate name for sniping equilibrium. It's still a 2022 model. Does that make sense? I'm not gonna have that be a separate kind of trade. Let's refresh it, see if it updated. Delete it. Oh, we have to delete. Okay, we're going on a side quest here. Just write them down. Oh yeah, I should just write them down. I'll write them down and tape it to top of my desk.
That's actually a great idea. Thanks, Gary.
Okay, wait. Yo, I kind of want to ask this thing about my trades and see if he'll give me advice. So yeah, I'm switching this. I'm not having no more 2022 EQ snipe. It's just 2022. Okay, now I can delete it. Okay, sorry, little side quest. You know what? Sorry, we're going on a side quest here. What advice do you have for me for my trade? Ooh, let's see what it says. Key issues. Multiple notes mentioned trades could have been more obvious or weren't A+ quality. Advice, wait for higher conviction. Yeah. That's something I gotta work on. Risk management. Several losses occurred after missed opportunities or emotional trading. Advice. Oh yeah, that's true. It's not even a 2-trade limit. It's a 1 loss limit. So that's not even right. You noted AMD mismatches. Example. Sure, time frame. Yeah. Anyway, we're gonna keep getting this set up. Okay. Now what do we do? Oh, let's write down the risk. Let's do that. Alright, guys. I did not intend to do this stream, but we're gonna do that. Alright. Let's find a pen. Oh, I have a ton of pens right up here. Yeah, see, this is you guys might be wondering, why are you wasting time right now doing this? Because this is a big deal. Like, this is the issue for why I don't execute a lot of my trades. It's because I'll hesitate and I won't know the risk. Oh my gosh. Yeah. This is actually a big deal, so I'm gonna write this down. Is there another pen up here? Oh, there's like 3 up here. Perfect. I'm gonna switch this up here. I have other things I put up above my desk like a long time ago, but I'm gonna move them. Okay. I'm just gonna start doing it, and then we'll keep reviewing the market. I just want to start doing it so I make sure I finish doing it. Okay, that pen's bad. Alright, I'll write the rest of them down later, guys. I know we should probably just do the market, or we should probably just review the market now, so I'll just do this later. Yeah, I'll do this later, but I'm going to tape them all up above my screen. Whew, guys, this is going to be like, it's like an operation control panel, bro. That's what this is going to end up being. And my end goal is I want to eventually copy trade across Top Step, Apex, Tradeify, Take Profit Trader, what's the other one? Like My Funded Futures, Alpha Futures. I want to copy trade every single one of them all at once. Could you imagine, like, I show my left screen and I'm like, boop, 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 boop. You guys would be like, oh my gosh, what is happening? That's the end goal. That's the end goal. I want to be able to get accounts with every single one of them. You know how vibey that would be? Or not necessarily vibey, but you know how powerful that would be? And on top of that, my personal account. That's the end goal. Alright, okay. I don't know if anyone's even watching anymore. Let's check. Sorry, guys. I got distracted. I had to put that down, and I'll do that later. Thank you for that idea, Gary. Let's go ahead and keep reviewing the market. Okay, you guys are still watching. Let's go. Okay, let's keep reviewing the market. So, what happened next? Well, we got inversion out of this. Once again, this on its own was a trade, and Reliable took this, right? So let's say I didn't take the 2022 for value gap, but you can actually take this inversion out of it. Not my preferred type of trade, I'm not going to lie. Oh, you can't even see my screen. Yeah, I appreciate it. I'm not even gonna lie, maybe I don't mark it out. It's just not my preferred type of trade. Plus, it'd probably be break even. Yeah, I switched it. Okay, plus it'd probably be break even, but you know what? Let's just say we didn't go break even here because of conviction, right? Let's say we waited till here to go to break even. This is actually a nice inversion here. Then again, you know, I don't like just taking a random inversion like that. But sometimes, if it's in line with your bias, like in this specific case, this was in line with my bias because we had our 2022 model, we had our time-based SMT, 90-minute sweep, and then we were in the macro, and then we had the opposing, the regular SMT that was the drawn liquidity that wasn't time-based. So with all those factors, like, maybe you could take this, honestly. And guys, the crazy thing about these trades that are like low time frame like this is such a simple trade, but this is actually, as crazy as this sounds, this is actually 2.6 to 1. Like, you wouldn't think just some random inversion on the 32nd would be 2.6 to 1, but this actually is. And so, you know, even though sometimes we don't really think about these kinds of trades, at least I don't, maybe you guys do, it's actually very strong. It's very strong. We could actually call this a 1 minute 2022 model. And then we got a 30-second inversion out of it. So yeah, I do not mind this at all. And then basically going break even. Why would I go break even here? Because by this point, it's either we're gonna go run these low resistance highs here or we're not. And so I would go break even right there, and you can see that's an excellent spot to go break even, because at that point then we continue through to go run these low resistance highs. So yeah, I like that. And then we can just mark this out as LRLR. Sometimes you gotta take simple stuff. This specific trade might be one I take on one of my alt accounts, because I have other accounts I can trade in New York session at half risk. I have a account for at any point during the day I can take a trade on my other account. I just call it the other account, or like my just for fun account. So that this could be one I take on that. And I have another account for New York too, which is also half risk. So that's kind of how I'm doing it now. But those other accounts are half risk. The one that gets copy traded to every account and is at full risk is the New York one. And that's just, I'm trying to have that one be the highest probability one. But that's how I'm doing it now. So yeah, nice 30-second inversion. Very subtle trade, but very clean. All right, 946. Inversion for value gap on the 30-second. Let's go ahead and save that. And as well, you could have held for the high if you were a degen. That's 4 to 1 actually. That's crazy. And this is actually a trade Reliable took, so before you say it's hindsight, it's really not. It'd be very realistic to catch this, but you would just have to kind of have like, you'd have to be very, very not necessarily confident, but you'd have to not be scared, and you have to have conviction. That's not always easy. So this is 946 inversion for value gap. It's a different version of the trade. So I'm gonna put number 2. Okay. So then what happens next? Let's actually just get rid of everything now. Oh, actually, let's show the Magneto effect so I can easily pull it up when I make the market recap today. But we had an SMT here. We have one SMT here, 703, and this high of 905. Notice how this is not sequential, and then this one was sequential because this was at 731. But this one was with 704 and 909, so it was just a regular SMT. And we witnessed, and the craziest part about this, guys, is we witnessed this live. Like, this isn't hindsight. I said live, guys, we could be seeing the Magneto effect. I said this live. I actually kind of want to watch me say it. I want to figure out, because I'm going to watch the video and when I make the market recap. Let's go if they're still watching. Actually, nah, I'll just find it later. But yeah, magneto effect. Very, very beautiful. Magneto effect might just be, I don't know. I kind of just, this is how I see the magneto effect personally. But it might just be like the recent SMT targets the old SMT. I don't know. Or it might be a new sequential SMT uses the old sequential SMT. I don't really know. This is kind of how I see it personally. I don't think you need to overcomplicate it. Basically, a stronger SMT is going to use an old SMT that's not as strong as the drawn liquidity. That's magneto effect in my book. Okay, so, all right, what next, guys? You can see, once again, how do we know that the market's moving algorithmically? Well, every single gap is holding. This is the nature of the market moving algorithmically. This is how you know that you're in line with the market, is when you start to see this algorithmic displacement. So that's kind of cool, right? You see this gap here. Oh man, was there an RTH gap? And so for everyone saying, why did you trade today? It was a bank holiday. Guys, just look at price action. Like, if price action is readable, you're good. You're good. If you can understand it and execute on it, you're good. Enough with this day I can't trade, that day I can't. No. Just look at the price action. Can you tell if it's making sense? Or is it just throw up? Go based off of that, guys. That's the best advice I could say. Like, everyone else saying you can't trade this day, it's just like, just honestly, just kind of just think for yourself a little bit. Yay, what up, Kirk? Let's go. I'm glad. Yeah, you can see how the market delivers in fair value gaps up to our drawn liquidity. Okay, let's look at something else. Yeah, let's look at something else. We've been kind of looking at the same little piece of price here for a while now, but there was a lot more price action, so let's look at something else. As always, though, that 950 to 1010 piece of price is going to be nice. Okay, I'm going to save this as FEGs algorithmically holding. Alright. So next, yeah, what do we look at next? Yeah, clearly we reversed after this, and logically, it makes a lot of sense why. I actually think we might have even got SMT. Yeah, you can see there was a very subtle SMT. And if you're not paying attention to this, you're going to get smoked, right? If you're not paying attention to this, you're going to get smoked. But very, very subtle SMT, and then actually CRT here. I guess technically it's, I don't know, it's not super obvious, but let's see if there was a more obvious one with YM. Okay, maybe it's not even obvious enough to mark out. I'm not even gonna lie. Either way, though, it's obvious at this point that if the market did end up stalling right here, like on one hand, yes, we could have continued to displace higher, which is the whole entire idea of the trade I took. On the other hand, technically speaking, with it being a bank holiday, the market, if it wanted to, it was going to come back into this range. And that's exactly what happened. And with it being a bank holiday, I should not have taken that trade. And what you could have done, I can't speak. Instead of taking the trade I took, is say, hey, bank holiday boys, we know we're not going to expand. Why are we taking a trade expanding? Let's fade that idea, right? Everyone in here that's getting in on the expansion, let's just go ahead and fade them. And let's actually take a trade back into the range. And so a lot of time trading comes back to framing a narrative and then taking a trade, right? So like accumulation, we have this entire range here. Let's find the point of control, right? We have probably a nice liquidity pool right here, it looks like. Wait, actually, let's mark this whole thing out. Yeah, so you can see why does the market reverse to this spot specifically? Why does it reverse to this spot specifically? Because we have a spike in volume right here, right? This is a spike in transactions in the in this range of price. This basically just shows, what is this? This shows how many transactions occurred at each price level. And you can see that this is a price level that had a high degree of transactions. So the market's going to want to return back to target this, because if there's a lot of transactions there, use a little bit of common sense, there's probably going to be stop losses there. Or maybe not literal stop losses, but people are going to exit their position for loss. So, logic, right? So this is a liquidity pool. So this is where we would target. We end up sweeping these highs here. So I guess you could consider all this, like, we sweep out all these highs. So one idea is you could have been waiting to play this reversal type of play here. We got a new day opening gap or new week opening gap. No, we don't. Hey, this is the indicator I've been working on. I got it to switch colors. I didn't even realize I got it to switch colors if it's bearish or bullish. Yeah, I'm still working on this. It's not supposed to be gold, but this is actually an indicator I'm trying to code. I don't know what this is. FA helped me out a lot, so I don't even know what this is. But I'm trying to code my own first and for value gap indicator. It's a long work in progress. Okay. Let's see. We had a sweep of these highs here. Then, was there a higher time frame key level? Like we probably want to see some kind of key level here. I guess we could use this as an implied BPR. That's probably what you would do. Right? You see why I say this is an implied BPR? Because we have a fair value gap, bullish fair value gap, and also if you combine these two candles, then that would be a bearish fair value gap. You can actually mark this whole thing out like that. So that's kind of how I would mark out this implied BPR. And all of a sudden we got a pretty clean narrative here, right? We have our key level, which is this 15-minute implied BPR. Now, then again, I really don't know if I would have seen that, but that's why we backtest to kind of figure it out and see how could we have seen it. Do we end up getting SMT at the high? As always, it's like the market always, it does everything it does for a reason. We get SMT at the high. We get this little Wyckoff type thing, actually. It's actually very interesting. This is a like perfect Wyckoff. You guys know what I'm talking about? Like the first purge, second purge, third purge, and then fourth failure swing. That's actually pretty cool. I'm not gonna lie. I don't see that happen all the time, but when that happens, that's kind of cool, right? Like this is literally what the Bitcoin high looked exactly like in 2021, and ever since then, I've never forgot what the Wyckoff distribution thing is, because I don't know. After seeing that happen in 2021, I was like, dang, bro, that makes a ton of sense. Like, basically, people that were longing this failure swing after we purged the highs 3 times just got wrecked. You used to trade Wyckoff? Dude, this thing is nice. Like it makes sense. It really does. I mean, no hate to it at all. I like it. Because what's happening? Right? We get 2 sweeps into a key level and then failure swing with SMT. And so, yeah. Like, there's going to be a lot of stop losses down here. So, yeah, we have SMT here. It's always interesting to see, was there time-based SMT? And did we take a true open? Yeah, we were above 922, which is the... Yeah, this is a very interesting... This is, like, very interesting, actually. So this is kind of like playing the reversal of the 90-minute cycle. And you might be wondering, well, what do you mean by that? What do you even mean by that? Well, right, we obviously had our manipulation and then expansion. Now we're above the 90-minute true open. So now we're kind of basically saying, okay, we're kind of expecting reversal back into the range here. So this is kind of, this was basically this was accumulation, manipulation, distribution, X. This was like a perfect quarterly theory. And this is a perfect AMDX. Perfect one. I'm not saying that happens all the time. It doesn't, but you get what I mean? Like, it's kind of cool how that was perfect. So 9:45, and then it goes 10:07. Oh wow. Wow. That's fascinating. So this actually was a 22-minute SMT at the high. Do you see what I mean? Wow, quarterly theory is so precise, guys. So look, 22-minute SMT at the high. So for those who don't know the quarters, right, we have quarter 1, quarter 2, quarter 3 ends like right here at 10:07. And then we get SMT, 22-minute SMT, and then reversal back into the range. That's, wow. That's pretty cool. Beautiful AMDX. So you could honestly, you could take this as a 2022 model here where we had a time-based SMT, and then you're like, okay, this gap should hold. I kind of like that a lot, actually. Would I see that necessarily? Probably not, but I like to observe. I like to observe and learn and observe and learn and then repeat that process over and over again. And then, yeah, beautiful move back down. to the lows here. Now, obviously, if we had the ability to see this, well then, in lifetime, then we'd be millionaires, right? It's not always that easy. But these are the guys that stopped me out, bro. the people who took this trade stopped me out. Oh my gosh. It's kind of funny. What? Oh, I wonder if there was a microcycle true open. Yeah, so honestly, I think there was, but I don't know if I want to get that into the weeds. Basically, right, if the 22-minute cycle ends here, okay, what's the true open of this final cycle? The true open of this final cycle, it's going to be, we have to add, so this is 22, so we have to add 5 minutes. 8, 9, 10, 11, 12, like 13, right? So you can see how you can use this 22-minute true open here to frame this final. It's crazy how precise quarterly theory is, bro. That's crazy. So yeah, I would just say 10-13 to be simple. 10-13. Hey, I already have it. And then yeah, delivery lower after that. So nice little 2022 model on the 15-second. Not saying I would catch it, probably wouldn't, but I almost certainly wouldn't. 10, 15, 2022 model, 15-second. I might take a break here. I might take a short little break. And then I'll come back. And then I'm going to film the market recap soon. Because I do want to make a market recap today. Because I want to talk about the Magneto effect. Because I do think it's valuable. Actually, I want to make sure I understand the Magneto effect correctly before I make a video on it. So, Magneto effect. It's a powerful concept in quarterly theory built on the premise of using... Okay, so what it does is it says using one SSMT to target an opposing SSMT. Honestly, I think it's just any SMT to target the old SMT. That's how I would interpret it. Sometimes you gotta make your own interpretations when they make sense in the charts. So I'm gonna call it the Magneto effect. I'm gonna make the video on it. I don't care. Yeah, I might take a break though. Oh, let's go. For watching. Alright, I'm gonna get some water. I'm gonna get some more water. I already kinda have some, but not that much. And then I'm gonna come back. So, okay, let's just zoom out again. Let's kind of figure out what kind of happened the rest of the day. Yeah, lots of consolidation. And you can think about why, logically, we had a lot. Oh my gosh. Wait. Oh my gosh. I thought this was a lower low. I don't know though. Would you guys consider equal lows with a higher low S&T? It's kind of it's an interesting thought, right? Clearly it worked in this case. I'm gonna have to think about it. What about YM though? I a long time ago I asked Dodgy. I was like, "Yo, is equal lows with a higher low SMT?" And he said no. So I've just gone on off of that ever since then. But now that it's been like 8 months or so, I'm like, why am I just going off of what Dodgy said? Why don't I just do what makes sense to me? And honestly, you might just consider this SMT. And if so, then it would be Phoenix model, which is why I wanted it to be SMT. I really wanted this to be SMT really badly, because then it would have been Phoenix model. Alright, let's not force it though. Clearly it wasn't there, so let's just move on. Yeah, clearly at this point we had another accumulation, manipulation, distribution. Honestly, I feel like you don't even have to have. Wait, this is Phoenix model. We have SMT with this low. Wait, I didn't even realize this. Yeah, this is really obvious. Take a look at this, guys. We have a pretty nice SMT with this low. And then the rejection block. We enter at can enter at the rejection block. Very simple, honestly. And the reason I like this is because it's obvious from an AMD standpoint that we have a giant range above, so we could come back into this range. You get what I'm saying? Accumulation, manipulation. You know what's very, very interesting about this, though? We don't come to consequent encroachment. And where do we come instead? We go to consequent encroachment of the neighboring wick. And this kind of ties back to this idea of, like, you know how sometimes when you'll have a breaker, and it'll have a little stubby wick. Let me just show you an example. Like sometimes you'll have a breaker and you want to use the wick as the entry, not the actual breaker. So like this. Like, note how the breaker, we tap the wick of the breaker, but not the body, and the wick was the entry. And you do that to basically get a sniper, to make sure you get filled, right? Just like this is happening here. Same thing is happening with a rejection block, where a wick on the right hand side of it is just slightly smaller. It's like people are basically saying, okay, what's the difference between consequent encroachment and then putting my limit order at this consequent encroachment to make sure I get filled? There's not much of that. There's not that much of a difference. I'd rather just make sure I get filled. So they put their limit order at that consequent encroachment instead, and then that actually works out better. It's an interesting idea. And then, wow, look at that displacement. I don't know, guys. I'm getting kind of... I don't know. For some reason, I don't like making the market recaps anymore. I just don't. I don't know what it is. I'll always love making the market recaps. I'm in a little phase where I don't want to film them. I don't know. I do like making them, though. I should probably just do it. Yeah, it's a similar situation to before. If we came back down to equilibrium, we probably would have had a 2022 model form there. Well, I might review the market more later, but I kind of just want to do a very simple market recap where I talk about the magneto effect, and then I might do another backtesting stream later tonight. That's probably what I'm gonna do. How is that an accumulation? Any any range, dude. It's all. That's what I mean when I say any range is AMD. So like this. Yeah, no, I get what you're saying, but the way that I see it is all price action is accumulation. All price action is accumulation. So that's why it's always a narrative framing, and you're basically just playing. Trading is just playing trade against where it's already been traded. So when I say this is accumulation, I mean, it's just old price action, is what I'm saying. It's a range. It's a range. From here to here is a range. Yeah, I'm going to end the stream here. And then I might make the market recap. It'll probably be pretty simple. Yeah. That's what I'm going to do. Yeah, that's fair. Whatever makes sense to you, bro. I like that. Alright, guys. Yeah, I'm going to make the market recap. I might take a little break first. Then I'll make the market recap. Maybe I'll look on Twitter for some stuff. And then if I remember and if I have the energy, I might do another back testing session later, probably in my bed.